What's up, everyone? It's Scotty with Money Investing. Another day, another banking crisis on our hands, and there's another regional bank which was down a little bit over 52% after hours, now trading pennies on the dollar here. And we earlier learned this week that First Republic Bank was acquired by JP Morgan for a very sweet deal. FDIC stepped in and is now absorbing a lot of those losses, and not to mention issuing a line of credit to JP Morgan as well to make sure the deal actually happens. JP Morgan ended up coming out on top when it ended up the bidding process in the auction. But today we're going to be talking about another bank called Pac West and Bancorp, and it's down over 52% after hours today after the markets closed and trading as low as $3.05. So this right here was the entire selling pressure, and you'll notice that this massive red candle with lots of volume resulting in this 52% drawdown and trading as low as $3, actually trading as low as $2.56, and from its highs of well over $28, now the stock is down over 90%, very similar to the fate of First Republic Bank as well, and now pretty much going bust here. So Pac West falls more than 50% after hours on report. Bank is considering strategic options. The regional bank is assessing options, including a possible sale, and bringing in advisors to evaluate long-term plans for the business. Piper Sandler and Stephens are two firms advising Pac West, and Bloomberg was the first report that came out on this company, and shares of many West Coast regional banks have been hit particularly hard since the collapse of Silicon Valley Bank. So far, we've had Silicon Valley Bank, we've had Signature, we've had Credit Suisse, we've had First Republic Bank, and now we've got Pac West as well. Just absolutely insane how many of these banks are falling over like dominoes. And the Los Angeles bank-based Pac West has roughly $750 million market cap, but I'm assuming it's going to be a lot less tomorrow when the day starts. It's going to be closer to $375 million, and it's down now over 90%. On Wednesday, Pac West shares declined nearly 2% and notched their fifth straight losing day. I don't think they have to worry about that tomorrow. And they reported that total deposits declined more than $5 billion in the first quarter to $28.2 billion. So they are continuing to see some more outflows. However, over the last few days or last few weeks and the last month, basically, they did see the deposits grew by another $700 million. Now, this could be part of the injection from some of the bigger banks as well. So, it can give you a little bit of a misrepresentation of how deposits are actually doing, but we did see $5 billion worth of deposits outflows. It's not as big as First Republic or Signature, but it's still a pretty big component of the financial services industry. And while Pac West is open to a sale, it hasn't started a formal process for an auction, Bloomberg reported, citing unnamed people familiar with the matter, and Pac West would have issues selling its entire business outright because not many buyers would be interested in the whole enterprise, which includes Pacific Western Bank, a community lender with 69 branches, among other lending businesses as well. So, when it comes to the banking industry right now, it is true that almost all banks are sitting on heavy losses, right? I mean, most of the banks that sold mortgage-backed securities, or that pretty much bought mortgage-backed securities or U.S. Treasuries, as interest rates have gone up, and they keep going up, and Federal Reserve Jerome Powell once again raised interest rates by another 25 basis points, and we're now at the highest level since August of 2007. You're starting to see these dominoes fall apart, and that's because of the credit tightening, that's because of the slowdown in money supply, that's because of the deposit outflows, that's because of these unrealized losses on their books. And when you combine all these things, what do you get? You get a financial system that's literally built on a very, very weak foundation. And we have constantly seen the consolidation in this industry of banks year after year. At one point, this industry had over 15,000, 20,000 banks, and it's now consolidated down to just under 5,000, not to mention only a handful of big banks, and not to mention only 4 that have the largest asset base at the moment, and they're considered to be SIBs, systemically important banks, so the government will not let them fail. They'll let First Republic fail, they'll let Signature fail, they'll let Credit Suisse fail, they'll let Pac West fail, but they're not going to let JP Morgan, Wells Fargo, Citi, B of A, and they're the ones who actually end up getting all these sweet deals on all these banks. So it's going to get more and more consolidated and concentrated as we progress. And even Jamie Dimon mentioned that the banking crisis is over. Well, apparently it's not. It feels like it's only getting started. We're seeing more and more banks come out, and it's not looking good. So for Pac West, I wouldn't be surprised if by the end of this week, considering how much it actually sold off, after hours, if there's a deal put together as well, if some of the bigger banks kind of come together and buy pieces off of its assets, and of course FDIC also steps in to put it into receivership as well. But it's really it's kind of a sad situation with a lot of these banks, because regional banks are needed. As I mentioned in my other video, they're actually needed in very small communities and parts of the country, because the big banks don't really offer that level of customer service or that level of lending to different parts of the economy, whether we're talking small, medium businesses, individuals, again, companies that need liquidity, that need the credit. That's where these small, medium regional banks step in to provide and solve that problem, because big banks are busy doing bigger deals. So that's where we are. And again, this right here is going to be the entire selling pressure. And if you take a look at JP Morgan very quickly, after hours, it was also lower, down about 62 basis points. It has seen a very nice rally, of 4%, getting up to 143. And then from those levels started to sell right back down about 6%. So support really is going to be at $125 for this stock. And then talking a little bit about BOA, which is again going to be Bank of America. I forgot BAC. So Bank of America right now also starting to pull right back down. Support level is going to be sitting roughly at $24, and we have been pulling back as well. But overall, these banks are still down on a year-to-date basis, and of course, Pac West is the one that's really struggling at the moment, down a little bit over almost 2%. And FRC is now gone. First Republic Bank is no longer listed. So if you go over to First Republic here, I believe it's going to be listed on the OTC market. So FRCB is the new ticker, now trading at 33 cents, and it was down another 90% on the day today. Market cap's now under $650 million. Absolutely insanity in the markets right now. But let me know your thoughts down in the comment section below. This is probably going to create more contagion, more fear around these regional banks. Maybe not so much with the bigger banks, but for smaller regional banks, you absolutely bet it's going to create some more contagion, some more fear around these names here. So very, very, very quick update here. I'm going to go over some of the extended hours action for the banking sector. And if you take a look at, let's say, Ally Bank, already down 72 basis points, after hours down 2.6. We got Western Alliance down another 22%. This is another one to pay attention to, because this is another regional bank. We got M&T Bank down 2.4. Then we've got Morgan Stanley, which was slightly lower. It's one of the bigger banks. Let's take a look at CMA. So Comerica was down another 7% after hours. FITB, which is Fifth Third Bancorp, down 2% after hours. And then Trust Financial down 2.3%. And BNP Paribas, again, it's more of a larger bank here. And SoFi, of course, has been selling off as well after the earnings, because their lending business composition has completely changed. So I hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. But small regional banks still under a lot of pressure. But make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, and of course, private live streams. Everything's included. As always, happy investing. I'll see you all in the next video.